Because when you hear shutdown, it's easy to assume that everything, I mean, the entire store is closed. Not the case. Let's welcome in PIMCO's head of public policy, Libby Cantrill. Libby, welcome. 750,000 people, huge potential impact. But I do want to remind our audience that I think this is critical because a lot of people are scared. People get Social Security, they use Medicare for health care. They're scared. Let's be very clear. During a, quote, shutdown, people still get Social Security. They still can access Medicare and Medicaid. The Federal Reserve operates. The military operates, though back paid. Law enforcement operates. Air traffic control operates. TSA, again, back paid. Let's hope they come to work. Impacted by a shutdown would be, as Emily said, government data. The jobs number is not going to come out. Government services. You got national parks and weather services. So it's not a complete shutdown, is it?
It is not a complete shutdown. Actually, if you look at the annual federal budget, around $7 trillion, we're really only talking about a quarter of that budget. This is the stuff that Congress appropriates, that they fund every year. As you said, it does not affect Social Security. It does not affect mail service. It does not affect Medicare. It does not affect the Federal Reserve, something that we, of course, are paying attention to. But what it does affect, as your previous commentary was just saying, in terms of data, which is quite critical at this period of time, and also not only those 750,000 furloughed workers, but this is actually quite important. There's about 100,000 additional workers who will have to show up to work but also won't get paid. So we are looking at kind of the range of 1.3, 1.5 million folks who will not get paid. Now, do they get back pay? Yes, they do. But it
still hurts when they're not getting paid.
It still hurts. And a short-term shutdown, as I think everybody understands, really is not a macro event. It does not tend to be a market event. But should this be prolonged, there could be some non-linear effects. So the longer it goes, the more it hurts consumption, the more it could hurt.
By the way, we shut down a lot of American cities for other reasons a few years ago, not minimizing this one bit. But what's interesting is that, and look at this chart from Deutsche Bank. Sorry, I had to reference it. It's their chart, Libby. It's their chart. Is that stocks tend to go up when there's a shutdown. Not minimizing the shutdown. Painful for a lot of families, painful for a lot of businesses that rely on government workers, delis, whatever it might be. But the stock market doesn't seem to care.
Yeah, the stock market has been, and I think understandably, continues to be sort of inured to this sort of political dysfunction, if you will. What you've seen, I don't know if that chart had captured this, what you see is usually risk assets selling off into the shutdown. So the first day of the shutdown,
maybe like today.
Sell off, exactly. And then they do their sort of a relief rally, if you will. In our world, what you also see is that yields end up rallying. There usually is sort of this flight to quality, if you will, flight to safety. That benefits treasuries. Dollar usually sells off. Gold also rallies. And that sort of, you're seeing that as well today.
But do we know why? Well, why? Well, because the market just thinks by now we're used to it. The government will eventually, quote, reopen. It's just a measure of how long it lasts.
Yeah, so I think that is the operable question here. And, talking to clients this morning is really what they're asking. How long can this shutdown go on? Again, if this is just a matter of days, even if it's less than sort of 2 weeks, then this is really a non-event. I think the concern that we have, though, of course, we're the bond people, so we're a little bit, glass half empty, is that there may not be a logical catalyst to reopen the government. Remember that the last time that we saw a full discretionary government shutdown was back in 2013. That lasted for 16 days. The catalyst to reopen that was the debt ceiling deadline in mid-October of 2013. There is no such catalyst here. So I think the concern is that if we do shut down, and it looks very likely, it's something we've been telling clients for the last couple of weeks, is that there may not be a natural, impetus to actually reopen the government, and that will have an economic impact and then probably will weigh on markets.
And you have